Hello, everyone. My name is Baxter Hines. I am with Honeycomb Digital Investments. I am the Chief Investment Officer here at the firm, and have the pleasure today of being with Professor Carol Goforth of the University of Arkansas. Today is January 4th, 2022. It sounds funny saying that. We're into the new year already. And what we want to do with this time today is really talk about some of the big trends that we see unfolding in this new year. What are going to be the big events that capture the headlines in the news, and also what are going to be, from a regulatory standpoint, at the top of regulators and legislators' minds as this crypto and blockchain space continue to develop at breakneck speeds. So with that, let me start off just saying, how you doing, Carol?
I'm doing great. It's a little bit chilly at the start of the new year, but it's a good time to be following crypto. Lots going on.
No doubt about it. Well, how about we just start off? If you want, what topic do you think is going to be something that, again, captures the imaginations and the market's attention as we go forward?
Sure. If you have paid attention to the trading volumes associated with our major crypto assets, Tether has been extremely active, and by far the largest capitalization for a stable coin, the largest daily trading volumes. I think we're going to see that gradually change. It has actually surprised me the continued popularity of Tether, given how much information about the lack of honesty and transparency has been presented in various court cases and investigations. And I think you're going to see a move away from reliance on Tether to not a move away from stable coins. I think the substitute for Tether is likely to be US dollar coin. I see it becoming a much larger player in the stable coin. And I think an increased reliance and increased use in stable coins generally is likely to happen in the coming year. That's probably the biggest change that I think we're going to see. I don't know. Do you agree?
Yeah, I think that the mix of people investing in crypto is changing every day. It's becoming more legitimate. The conversations that I'm having with institutional investors, with financial advisors, with high net worth individuals, it's broadening out. And you combine that with the fact that just the overall trend in adoption is growing, just like the internet grew in terms of the number of users it had in the mid 1990s. I think that because of the factors that you mentioned earlier, of USDC being a much superior type of stablecoin than Tether, people are just going to naturally gravitate to it. There are too many question marks around Tether. I don't know whether a regulatory body is going to sink it. I don't know what is going to. Maybe something comes out of the woodwork that the assets on its balance sheet are bad. I don't know what will eventually happen to Tether, but I do know that people want what you said, transparency. They want best business practices. They want alignment of interests. And USDC definitely offers that over Tether. And so I think this new crop of people that are coming into the marketplace are going to demand that. They're going to gravitate towards USDC. So I do think that's going to be a big sort of sea change, if you will, in the stablecoin market.
And what about you? What big changes do you see coming?
You know, we continue to talk about scalability in the blockchain space. I think that enterprises especially are starting to look at, how can this really change their business model? How can they do better, faster, cheaper business practices? And you're going to see it to some level, at least at some point this year, a big name corporation starting to do major processes through DLT or through blockchain. And so I don't know whether that's going to be Walmart putting its supply chain onto the distributed ledger platforms, or it's going to be Louis Vuitton doing anti-counterfeiting measures, but something like that is going to come about, and you're going to start to see some great use cases where big corporations are starting to put blockchain to use, and I think that's really going to spur other corporations to follow that lead.
I think you're already seeing the very beginning stages of that. Walmart certainly has been engaged with IBM and their food trust to improve transparency, traceability in the supply chain. I do see, some people are calling it blockchain 4.0, this point in time where we see widespread adoption of blockchains. My personal impression is that those are more likely to be permissioned with limited public access, so that you might be able to go to Walmart and scan whatever item you're buying and figure out what was the real country of origin. But I think the data is likely to be controlled by Walmart, if Walmart is the company to make this public, by Louis Vuitton, if it's the company that is showing you where that particular bag was manufactured, and the making sure that nothing is counterfeit. So I see a growth of permissioned blockchains, private blockchains, not really the completely distributed ledger that you saw in conventional or original, in old-fashioned crypto assets.
Sure. Where I may differ with you a little bit on that is I totally am in agreement in that, yes, corporations are going to want to control their data. That data is just too valuable to give to someone else to just put right out there in the public domain for anyone to look at. What I think will happen is you'll see these hybrids of public blockchains and private blockchains. The private blockchains will, like you said, control the supply chains, track the supply chains, monitor the supply chains. But I see a way where, if, let's say, Walmart wants to communicate with Cargill's blockchain, or they want to communicate with Levi's Jeans, their VF Corp, their supply chain, there will be some sort of public blockchain that provides a cryptographic timestamp onto some of the transactions that are happening in those private databases. And what that does is it will ensure that these private blockchains are not omitting transactions, they're not favoring certain transactions to go before other transactions. There's no going back and putting reversing transactions or something like that into the blockchains or into these ledgers that would really denigrate the integrity of these databases. If you have that cryptographic timestamp that's in the public, that to me is of incredible value and allows, again, that trust element of blockchain to really flourish. And so that would be the one little nuance that I would say that I see this a little bit different from what you were just describing.
Yeah, I'm not sure. I'm not sure that that's the way it's going to go. I see more of a potential role for a market participant to come in, like an independent auditor, who's part of the blockchain with the permissions and a duty of confidentiality, and they come in like a CPA would come in with an audit and say, yes, these numbers are accurate, and say, yes, this information has not been tampered, and we have access to indicate that nothing has been undone unless, for example, there is a bug or an illicit transaction took place that should not have. So I don't see it going the hybrid way, but time will tell.
Hey, we'll see. We'll see what'll unfold. Also, just one last question: what do you think will be at the top of the regulators' minds here in the U.S.? What kind of issue do you think they're going to focus on more than anything else?
DeFi exchanges. How the heck do we regulate them? I think Gensler and the SEC is saying that for crypto assets, we'll just use a broad definition of Howey and we'll regulate anything we want to. But that problem of exchanges, regulating exchanges, particularly the DeFi ones where it's hard to say who is the issue, who is the intermediary, who is the person that is actually responsible for the transactions. That is something I think you're going to see an increased pressure on Congress to act, because we don't have a good regulator, we don't have good laws to cover something that is really so different from what has come before, when we are used to major financial intermediaries in all of these transactions. So definitely DeFi. What about you?
Yeah, I would add DeFi is really getting a lot more attention. You've seen Elizabeth Warren talking about it. You've seen, on the flip side, senators and members of Congress on the Republican side talking about it. So I think that regulation is going to come up because it's going to become a bipartisan kind of issue. We need investor protections. That's really what the government is all about. Where I think that they can strike first, and where it's sort of a no-brainer type of target for them is to go after the KYC, making these people that are dealing with the space know the customers or have some sort of way to prove that the person on the opposite side of somebody is not a nefarious actor, someone who's sanctioned, someone who is doing something that the law frowns upon. And so I think there needs to be some clarity in that regard. How they go about it, I don't know, but I do think that applying KYC, or at least sending a message that the regulators want these DeFi protocols to use KYC, that is something that they need to go after.
They do, and the reason I see that as needing to come from Congress is because who is the person who needs to do the KYC when it's a program, which is not a legal person under certainly securities laws, for example? Who is it that is supposed to be doing the KYC? Brokers and dealers are already supposed to know who their customers are. They're already subject to FINRA and they're already subject to the requirements that FinCEN puts on brokers and dealers. That's one of the things that they are supposed to be doing already if they're dealing with securities. And the question in the DeFi space is, if you're doing these transactions without the assistance of a broker dealer, it's through this exchange, who is the person that you are going to go after and on what legal theories? And that is where I see the real gap in our existing legislation and regulatory structure.
Right. How does the regulator enforce these laws that are already on the books? So I don't know. I mean, I would speculate they go after maybe, I don't know, a hedge fund that's dealing in a pool where maybe they identify that there's a sanctioned person taking place, or the Iranian National Guard, or North Korean nuclear research. I don't know, but that to me seems like you could almost make an example out of a financial institution that's profiting from this. You say, hey, look, because you're in bed with these people that you didn't know who they were, but we've identified it as Mr. X, who you're not supposed to be dealing business with, you got to now face the consequences. I mean, is that something they could do?
Yes, and I think the OFAC, our Office of Financial Asset Control, certainly has they've given every indication that they intend to enforce those rules. So looking at somebody like a hedge fund, that's possible. So if that's your business model, take care.
Yeah, that's why we've talked about many times. We're willing to be innovative, but we're not going to be so innovative that we don't obey laws here at Honeycomb, because we know that's the quickest way to get yourself into a lot of trouble.
And that's why I'm happy to be on the board of advisors with you guys, because I know you guys are compliant. Or doing everything you can to be compliant.
Yeah. And I think staying away from those known unknowns out there is one of the ways to go ahead and do that.
Agreed.
So it's going to be an exciting year. I think there are going to be lots of things that come out of the woodwork that no one would have ever expected. That's what makes this a really exciting place to be, and continue to have discussions like this as time unfolds. Thanks again for being here today, Carol.
My pleasure, as always.
Talk to you soon.
Bye-bye.